The short-term price action is preparing for the next move. In today's video, we're going to be doing a technical and structural analysis for the short-term, the daily, and the weekly charts. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an awesome day today. In today's video, we're going to be going over the daily, the short-term, and the weekly charts, discussing all three from a technical and a structural perspective, specifically focusing on the smaller time frame in relation to the next potential moves, discussing trigger points for continuations up or trigger points for continuations down. By the end of today's video, you will have a well-rounded and detailed understanding about what exactly you should be looking out for and potential moves for Bitcoin going forward. Before I get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. If that is kind of content you're interested in, join us on Telegram. It is a second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic data. If you are interested in our VIP group, we post exact trading signals with exact entries, exact targets, exact stop losses, everything you need to justify your decisions, analyze the markets, and stay up to date with what is going on with Bitcoin and, of course, altcoins. If you're interested in joining that, you'll get access to the main channel. You'll also get access to a multitude of group chats. Our general chat, our trading chat and education chat, our trade setup chat, our help chat, our daily video chat, and, of course, our news chat over here. If you're interested in joining, go to the free channel, click the pinned comment at the top for more information. One more thing before we get into it, guys, I am starting altcoin videos again soon. I haven't decided what format I'll be doing them in. I have decided they'll be either done on this channel or a brand new YouTube channel. More information to come later on. Let's go ahead and jump in with the market data. How are we looking for today? Of course, it is the 21st of August with around, what are we looking at? We're looking at about 9 to 10 days left in the month, and we are currently down 10.65%. Looking over to September, we can see September historically is a very red month. Not percentage-wise, we don't see large moves in September. We're not seeing 30% moves. We're not seeing even 20% moves, but historically, it is relatively red. If we look at the overall percentage returns over here, we can see out of the last 9 years, we have only seen 2 individual years that have been green, the rest have been red. This is something we have to consider moving into September. Looking at the 24-hour volume, we are sitting very low at only 33 billion, down 15% in the last 24 hours. 24-hour liquidations are sitting incredibly low at 24 million, down 44% in the last 24 hours. This is quite indicative of compression. This is very indicative of sideways price action and consolidation. If we do take a look at Bitcoin, we are seeing a fair amount of consolidation and compression, followed by what we saw was an aggressive correction toward the downside. We're going to be discussing in today's video exactly what we expect from this range, the directional moves from this range, and potential trade setups you can take from this short-term range. Let's go back to the data. Looking at our volatility index, we did see the volatility index take a little bit of a sharp turn toward the upside, but has since dropped back down. So we saw a violent move upwards for the volatility index on the 30. We also saw the same thing happen on the 60, a violent move towards the upside for both, but again, these are kind of coming back down / plateauing at this level. Moving back over to the liquidations, with 24 million in liquidations, we are very evenly spread between shorts and longs, which again is very indicative of chop, very indicative of indecision, and very indicative of sideways price action, all of which we are seeing right now: chop, sideways price action, and compression. A lot of indecision right now in the market on the short term, but we're breaking it down in today's video so you have a little bit of clarity. Moving to the DXY, the DXY has opened up, and it's opened up relatively red. And we're going to go ahead and just remove some of these little arrows on the chart, discussing it in today's video. We have seen the DXY break out of a higher time frame, diagonal downward trending resistance. This is our structure. We've been in a nice wedge structure. We've been in for, we're looking at around 8 months or so, a very, very long time. We broke towards the upside. If we take the measured move of that, we're looking for a target well over our next high time frame level of resistance. However, if we look at the smaller time frame, it does appear we are retesting an area of possible resistance. If we do see a rejection over here downwards, we could potentially see the DXY come down to retest the confluence between the dotted trend line and the 101, or should I say 102.5 level. If we do see a short-term correction over here in the DXY, that will provide some short-term relief to the stock market and as well to Bitcoin. And if we do see that correction downwards, we are more likely to see the short-term direction of Bitcoin actually take a little bit of a move toward the upside. But we'll come back and discuss that later in today's video. Alternatively, if the DXY does fail to come down and actually continues upwards, this will continue that downtrend on the high time frame for both crypto and for the stock market. Now, you do have to understand the intraday movements are important, but they are less important than the high time frame. If the DXY continues upwards on a higher time frame like this, upwards to 104, it is more likely that stocks and crypto will continue downwards on a higher time frame. We're not looking at the day-to-day movements. It is common that the day-to-day movements go in opposition or sometimes go in complete correlation. It is more or less the DXY is moving up on a higher time frame, on a weekly time frame, on a monthly time frame. We're more likely to see the stock market and Bitcoin move down on a higher time frame on the weekly, on a monthly trend. Okay, very important to understand that. At the moment, we've seen a breakout. This could potentially develop into a reversal, but again, it also could potentially be a false break. We have to keep those facts in mind. If we're looking at the economic data, we do have, of course, the Fed Powell speech. This is going to be on the 26th, so in 5 days. Moving on from there, on the what is this, the 31st, we are looking at our PCE data and our personal spending and income data. Very, very important to look at this for potential rising or falling inflation data. Looking at the S&P 500, we have come down and potentially created that low over here, almost coming down to retest this local high point in this demand zone. We can see the demand zone very clearly in the VRPV gap. We still do expect this to fill. The question is, are we going to see a small bounce back up to retest this level first and then a correction down, or are we going to see a straight correction down? Again, that heavily relies on what the DXY does. So we are definitely watching the DXY to see what that does to infer the probabilities of moves on the short term for the S&P 500. If we are going off what we said a few days ago, we did say at this level here, we are looking for shorts, we are looking for corrections. The risk return for shorts and longs are significantly in favor of shorts. We have seen a correction. We've almost come down and retested our target. This is our first target at 4,300. Moving on to Bitcoin, guys. Let's go. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Go ahead and jump in, and there is a fair bit to discuss today, but at the same time, not too much has already been happening as the price action has been compressing a fair bit. For the new viewers to the channel, we're going to go over our high time ranges, and then we're going to go ahead and get into our technical analysis for the short term and discuss the next move. We'll keep today's video nice and short and sharp because, again, although there is a lot to talk about, there really hasn't had too much price action or development over the last 24 hours. So what we see over here is our high time frame ranges and our high time frame support and resistance zones. Support and resistance marked out by our red and green boxes. Our ranges are the distances between the support and resistances marked out by the trends. Okay, perfect. Our overall diagonal uptrend is represented by our uptrending diagonal trend line, which is this black line. As we can see, this established a trajectory of price action for the last 10 months or so of Bitcoin, which represented a weekly uptrend slash a monthly reversal pattern into our macro resistances, which sit at 30,000 and 32,000. We can see a breakout over here. We pushed upwards all the way up to that 30,000 to 32,000 level. We reached our macro resistance, the macro resistance being that yearly long level of resistance from the prior bull run, where we have rejected from and now fallen back down. We have lost this uptrending diagonal trend line as momentum flipped negative as expected, retesting our next target at 25.2k perfectly. So at the moment, we have transitioned from a weekly bullish trend into a weekly bearish trend. We are weekly bearish because two things. Number one, we are underneath the weekly, or should I say the monthly uptrending diagonal trend line, okay? And of course, we are underneath slash have rejected from the top side down from the 30 to 28k major macro horizontal resistance, therefore entering a weekly bearish trend. Perfect. Awesome. Daily bullish trend starts above 30,000. If we get back above 30,000, we will be back in a daily bullish trend, and that could facilitate a continuation into macro bullish. Of course, if we are daily bullish, we're also likely to be weekly bullish, and therefore we can also say the weekly bullish trend will be reclaimed above this uptrending diagonal trend line. Until then, the weekly bearish is intact, and we are progressing from a weekly bearish into a monthly bearish trend. The lower and lower and lower we do end up progressing. The weekly bearish trend flips into a monthly bearish trend upon the loss of 24.4. 24.4 is by far and large, right now, the most significant level of support on a chart that Bitcoin does need to hold above before the bears really go ahead and take absolute control of this chart. If we look at 24.4, not only 24.4 is a 400-day long support level. You can see it's marked out over here. A 440-day long support level. It also represents the 50 EMA on the monthly chart, that red line, the 50 EMA on the monthly chart. And more importantly, it also represents the weekly Gaussian channel midline over here. We're going to bring it up over here in a second. The weekly Gaussian channel midline. This green line over here, that is our midline, the Gaussian channel, that is reflected by 24.4. If we lose those levels, the probabilities, excuse me, the probabilities of a continuation down to 20,000 significantly increase, okay? Right now, the probabilities for a transition from a weekly bearish trend to a monthly bearish trend is relatively low. But if we lose 24.4, it significantly increases. Just as when we lost 28.4, the probability significantly increased for a move to 25.2. That trend, that bearish trend, gains significant strength when that key level of structural support and liquidity is lost, okay? Now, one more thing before we move on to short term, we do have a head and shoulder pattern over here. The head and shoulder pattern is targeting $20,000, okay? That is a key level of support, and again, an area of demand we are looking for if we do lose 24.4. Again, I'll say it again, $20,000 is only a potential if we lose 24.4. Until then, it is not on the field, okay? Let's go ahead and jump into the short term, discuss the next move, discuss what's going on, and then wrap up the video. So as we can see, guys, we had a violent correction from that uptrending diagonal trend line, as we discussed in our video already. The uptrending diagonal trend line is represented by this black line on the right-hand side. You can see it represented on the left-hand side, so we'll go ahead and drop that off. Perfect. Okay, moving down, we saw a violent correction. We can see just how violent that correction was, taking us all the way down to around 24,000-ish, a little bit higher, 25.2, 24.4. Since then, we have bounced quite a fair bit, but have more or less been pushing sideways. We're going to see just how that overall volatility on the short-term chart has been drying up. And we can see that represented by the EMAs over here. We have our 50 EMA, which is represented by that red line. And the distance between the price action and the 50 EMA represents overall volatility over a vertical scale. If we look at it from a horizontal scale, we can see how the distance between the 50 EMA and the price action has started to shrink to the point of which we are in this tight horizontal compression. This represents decreasing volatility. If we see decreasing volatility after an aggressive correction, that is a reflection that the trend of which we were in has weakened, okay? So if we're an aggressive downtrend and the aggressive downtrend has weakened, that suggests the bearish strength is diminishing. That doesn't necessarily mean the bulls are going to take control, and it also doesn't necessarily mean the bulls are taking control right now. All it suggests right now, as of the chart, is there's bearish weakness and there's compression, okay? So we do not expect the bears to significantly push the price down right now until we trigger specific liquidity points. So where are the points on the chart where two things will occur? Number one, what is the price point the price will need to fall below for the bulls to reclaim control and the strength and push the price lower? And what would be the target? And two, what is the price point the bulls need to get the price over again to push the price upwards, and what will be the target? So we're looking purely from a horizontal perspective over here. The key levels, again, are going to be levels we're looking at according to our VRPV. So again, our VRPV represents historical trading orders within our visible range, where our orders are set and where our liquidity gaps are. Looking at these low points, we are looking for a break below these low points at 25.8. A loss of 25.8 will significantly increase the probability for a continuation back down to retest 25.2. 25.2 being that high time frame level of support. So we're looking for shorts. If we're looking for continuations or for new entries for shorts, we are llooking for a loss of this 25.8k level. But again, guys, we can't just go off price action. We can't just say, if the 28.4k level is lost, we're going short. We have to look at what the technicals are suggesting. We have to identify key trigger points from a technical perspective to identify if a short on that level will actually be a valid decision, if it's going to be a decision that the technicals, that the metrics are suggesting. And that is something we're looking at. So if we're looking at this cluster of price action, we're looking at this CVD. We can go ahead and pop our low in if here that represents the low. If the CVD falls below this green line and we have lost the 25.8k level, it is highly likely a continuation will continue downwards. If we just see the price go down, but we do not see technical weakness, meaning we do not see momentum shift negative, and we do not see decreasing volume over here on the volume delta, it is unlikely that move will be a continuation. It is more likely it will be a retest, such a fake down before a continuation upwards. The same goes for the move upwards. We are looking for a push upwards above this local area of resistance. Our local area of resistance, of course, being this 26,200 level for a continuation upwards. For the bulls to really start taking control, we do need to see the $27,000 level reclaimed. If 27,000 is reclaimed, we are entering this gap over here where volatility should pick up, and we should see a strong move into this range. If we're looking for continuations upwards, we are definitely looking for a break over 27k. If we look at the whole scheme of price action right now, the bigger picture right now is very clear. We have weakness, okay? If we're looking at the RSI, we can see the price action is very, very oversold. If we're looking at the 50 EMA, we can see volatility on the higher time frame is still quite high. If we're looking at the CVD has actually pushed up a little bit, which is something to keep your eyes on for today, but we'll come back and discuss that in another video, particularly maybe tomorrow or the day after. If we're looking at the price action over here, we can see that on a higher time frame, on a 4 hour, on an hour, that local top range of liquidity has been established as a resistance, and therefore we can act as a trigger point for a continuation upwards. You can see how the 50 EMA is compressing downwards, retesting and providing a level of resistance on the smaller time frame. So for a continuation upwards, we're definitely looking for two things. Like I said already, the price to break above this level, okay, and potentially to retest it for a continuation upwards, okay. And number two, we are looking for positive momentum, and we are looking for positive volume. So we're looking for those particular high points right over here. We are looking for the CVD to start breaking through these high points on the CVD as it breaks through its price action to indicate this breakout not only has the liquidity level taken out, but we have the positive volume and positive momentum to substantiate the move continuing upwards, okay? If we do see a breakdown, 25.2k is that next target. If we do see a break upwards, we are looking for 27,000 or close to it. And if we break over 27,000, we are then looking for a move into this red box where we will potentially find resistance and come back down. It is very, very, very hard to say exactly what is going on right now. And it's almost impossible to tell you where the price is going to go immediately next. And that is why I'm not taking any new positions right now. I am staying in my current positions, which I took well before the breakdown, okay? And I'm waiting for the triggers waiting for the confirmation to act on the price action and then take the next move. Right now is not the time to be saying we're going up or going down, okay? Particularly on the smaller time frame. Right now is the time to observe the compression, observe the decreasing volatility, observe the price action, and then make a decision based on the directional break the price moves in. These chop zones, as you can see by the liquidation data, are very choppy. If we go back to liquidation data, we can see longs and shorts are equally getting chopped up. We are up, we are down, we are up, we are down. We're changing between bullish, we're changing between bearish on the short term. It is flipping both ways. It is tricking a lot of people. This is what we call a classic leverage trap, okay? These ranges are classic leverage traps. Wait for the range to break, okay? Have a plan for either way and then act on that plan. Thanks for watching, guys. Keep today's video nice and short and sharp. Hope you enjoyed. I'll catch you guys in the next one. Cheers.